Hello friends, welcome to another video, and in this video we will see how you can be successful and profitable in the market by trading only one time frame. So for example, here we are taking example of gold, and we are on 30-minute time frame. So we are going to ignore any other time frame like 1 hour, 4 hour, daily, weekly and monthly. So we will be just talking only about 30-minute time frame. So how you have to be trading the 30-minute time frame or any other time frame, like you can take a 1 hour or you can take a 15-minute, for example. So basically what you have to be doing once you come into the market, one thing you have to make sure that you are trading only during a high volume time. For example, that can be a London session or that can be a New York session, because we have high volume into the market at that time. Right. So what we are going to do, we just you just come to your terminal. That can be the trading view or any other terminal that you are using. So we are on 30-minute time frame on the gold. So what you have to do, first of all, just try to identify where the price is. Once you identify where the price is, you have to mark your immediate support. For example, this is our immediate support, and you also have to mark your immediate resistance. So we can see here that we have our immediate support and resistance. So as we can see here, we have our resistance and we have a support. After marking our immediate resistance and support, you also have to mark your next resistance and the next support. For example, here we can see and we know that our next support is right here and our next resistance is right here. So as we can see here, this is our resistance, this is our support, right? So now we know that this is our immediate resistance, this is our immediate support, right? So now, if basically we get a candle close above the resistance, for example, this is our resistance, this is our support, and we are on the 30-minute time frame. If we get a 30-minute candle close above this resistance, right? Once you get a 30-minute candle close above the resistance, that will indicate that this resistance has been broken, and now there is a very high probability for the price to go to the next resistance, because we are trading during a high volume time. So what you have to do when you have this kind of scenario, just wait for the next candle to open up, and once that candle make a bottom wick, just wait for that candle to break the high of the previous candle, because once this new candle make a bottom wick, you can keep your stop loss below that bottom wick, and you can target this resistance right here. For example, we made this bottom wick, and once we break this high here, that should be the entry, and you can target your resistance right here. So that should be the your target, and you can keep your stop loss below this wick. Same way, to the downside, if you get candle close below this support, you should be, that we have a clean range on the left hand side. If you see, we have clean range on the left hand side. Same situation was here, we have the clean range on the left hand side. So same thing here, we have a clean range on the left hand side. Once we get a candle close below the support, that will indicate that this support has been broken, and now there is a very high probability for the price to go to the next support. And where is the next support? This one is going to be our next support. So you can anticipate the price to go down. So same scenario here as we did on the upside. So once we get this candle close below this support, wait for the next candle to open up, create the top wick. Once we create the top wick, your stop loss should go above the that wick. And once that new candle break below the previous candle, that should be basically your entry, and you are going to target the new support or the next support. So that is, you should be trading.